I'm joined today by Paul Brennan, the CEO of Ballard Mining. The ticker code is BM1, and they are a company that we've covered on the Markets IQ. They're one of our original recommendations from late last year. So, Paul, do you want to give our investors just a bit of an overview of your history and how you got into Ballard Mining?
Sure. Thanks, Isaac. Well, I'll just go right back to the start in terms of Ballard's inception. So the Ballard's main project, the Mount Ida Gold Project, sat within Delta Lithium. Delta's precursor company by the name of Red Dirt Metals. They originally purchased Mount Ida for the gold. They subsequently discovered lithium in the core trays as part of their due diligence, and the lithium price was running hot at the time. So Delta went and raised, I think it was $75 million by way of an ANREO, and pivoted into lithium, rebadged the company to Delta, and as part of that capital raise, had a couple of big shareholders by way of MinRes and Hancock come onto the register. And so whilst Delta was exploring for lithium, the joke being they continued to trip over the gold. And I joined Delta about 2 years ago with a view to Delta's ambition to do something with the gold. And for 12 months, we looked at a number of options, toll trading, some sort of a form of JV, or even indeed an outright sale. And what became obvious was the best outcome, or the cleanest outcome, was just to set Ballard free. So that led to a demerger and IPO of Ballard. It was around this time last year we kicked all that off, and then Ballard listed on the ASX in July last year. So Delta is there still with 34% of the register, and a couple of Delta's major shareholders, as I said, MinRes and Hancock, came onto Ballard's register as significant shareholders in their own right.
Yeah, it is actually a bit of an interesting story. When you look at Delta and Ballard, the stories side by side, I can't help but think the Ballard story for me is much more compelling, but maybe I'm just a bit down on lithium in general. So yeah, it is interesting because I kind of it's a bit strange that they didn't do something with it earlier, and that they didn't make that their main story. But I guess, like you said, they wanted to pivot into being a lithium company
Yeah, correct. And it's probably not for me to
to
talk
bag
about
them.
that strategy. Oh well, I think, like I said, with I mean, Minres and Hancock, and there was others, Idemitsu, they're all there for the lithium. They've all,
Yeah, of course.
and I'm quoting James Crozer, their MD now. They've all drunk the Kool-Aid.
Mm.
They believe in the long-term thematic, and they didn't want to see Delta's balance sheet used to develop a gold project. And as I said, that's why, almost on a process of elimination, it just made the most amount of sense to set Ballard free. But Delta's been super supportive. We've done two placements since that original IPO, and Hancock have participated in both of those, and that's why they're still sitting there as a substantial in their own right. So Delta's unencumbered, and as you say, they're purely focused on lithium, and probably have the opportunity. I guess the lithium market is starting to warm up again, but with their cash balance, have the opportunity to do something potential, maybe not quite counter cyclical, but yeah, it's still a favourable market.
Yeah, coming off those lows in the lithium market, absolutely.
Yeah.
Yeah, when you put that context to it, who the shareholders is, then it does make a lot more sense. Like why the company went this path, or why Delta went this path of the spin out. In terms of the project, like I think you guys have got one of the best projects, gold projects on the ASX. Like it's just a fantastic deposit you've got there. Do you want to take us through the what you're sitting on in terms of Baldock and the rest of what you've got, and what's
Yeah,
happened just recently? Because obviously you guys are in a massive exploration campaign at the moment.
yeah, sure. Thank you. Yeah, it is it is a good project, and I guess that's the main reason that as I said, I was working for Delta, and I put my hand up to go with Ballard um, as part of that IPO. I'd been working on it for a year, and I didn't see myself running a exploration company, but we're very quickly transitioning into development, and part of that is driven by the advanced permitting status. But I can talk to that in a moment. But just in terms of high level metrics, we've got a 1.2 million ounce resource. Of that 1.2, 1 million ounces is contained at the single project called Baldock, who you just mentioned. So there's a million ounces at 3.5 at Baldock, and of that million ounces at Baldock, there's 670,000 ounces in the indicated category, the high confidence res cat, and that's at a grade of 3.7. So we came out of the IPO starting blocks last year with the use of funds. We kicked off with a 86,000 metre infill drilling program at Baldock. We already had a million ounces. We took a view that at some point the company's valuation has to be measured on something tangible, and we felt that indicated resources as opposed to inferred ounces was the right thing to do, and that's delivered. That was a very successful infill drilling program, and now we're just waiting on the key modifying factors, geotech and met, and we're on track to publish a maiden ore reserve for Baldock later this year. We expect that to be anywhere between 400 and 500,000 ounces. That underpins the first 5 or 6 years of the mine life. And right now, what we're busy doing, we've got 6 drill rigs operating. We're embarking on a 220,000 metre drilling program. We're investing $50 million, which, again, for a company our size, we're punching, excuse me, well above our weight in terms of that exploration expenditure. And with the drilling, where it's twofold targets. One is to extend the mine life at Baldock, and the second one is to add incremental production uplift to Baldock. So Baldock's predominantly an underground mine, and we've studied that to death. And we see Baldock contributing. It's a 750,000 tonne per annum underground mine, producing 80,000 ounces per month. So we've got a number of regional resources, and we're busy drilling those, and we're targeting those as what I call the incremental stocking fillers or satellite open pits. And our top down goal is another 30 to 40,000 ounces contribution from those satellite open pits. So we have 80,000 ounces per annum from Baldock, another 30 to 40,000 ounces per annum from the open pit. That gives us 110,000 ounces mined or 100,000 ounces recovered. And with the drilling we're doing, we're targeting a minimum 8-year mine life, which we think is the right number to go through for conventional project finance for debt and equity. And the longer term target is 10 years. So in terms of numbers, an 8-year mine life is about a 1.5 million ounce resource, and we're confident that we'll tick that off in the September quarter. So in the September quarter, we plan to come out with a 1.5 million ounce resource. That then flows through to feasibility study, FID, etc. We don't plan on turning off the drill rigs. We keep drilling, and assuming that we go through to FID and then into construction and build the project. If that's the, call me a liar, 18-month period, during that construction window, we're still drilling, we're still growing the resource, and then by the time we actually turn the processing plant on and start producing gold, ideally the inventory is growing to 2 million ounces, which then supports a 10-year mine life. So it's 8 years to bank it, and then 10 years is the top down goal to have 10 years of mine life when we actually kick off production.
Yeah, that's fantastic. I've got a heap of questions. That was a lot of information. So,
Bit to
firstly, I think,
digest there, sorry, but yeah.
yeah. So, 1.5 million ounces is what you're targeting. So, we should probably say, or just clarify, that's not something that you have established already, right? That's
No,
yeah. So just to be very clear for everyone, we're not saying that Ballard is sitting on 1.5 million ounces already, but that's what you are confident that you think you can achieve.
correct. So our current resource is 1.2.
Yep.
We put that in February this year as part of that indicated all that infill drilling that we did at Baldock, and then by September, as of today, right now, we've got 6 drill rigs on site, and so by September, we're targeting 1.5. Or the other way to think about it is we won't drop a resource update on market until we've achieved that 1.5 million ounces, because that's the number we want to take it through to, as I said, to feasibility study and ultimately FID.
Sure. And for context as well, like I think, for people who aren't, mining experts or gold mining experts, 220,000 meters is quite a large campaign, and you guys have already done a substantial campaign as well. So, like,
Yeah,
I don't know if we can put that into context very easily, but there's certainly a lot of junior miners that are embarking on sub 10,000 meter campaigns, right? Like, do you have a good way to put it into context, like how big that is?
yeah. I can refer to a I was in Sydney last week presenting at the RIU. That slide deck's on the ASX platform. We've got a slide in there that shows where we are and our neighbouring operating mines, and I've put the published exploration budget of those neighbouring operating mines on that slide. So Vault is a $30 million exploration spend. This is all for FY26, so coming to the end of that. So yeah, Vault was 30, Genesis was 30, and Orabanda, who are directly to the south of us, theirs was
73 million by the look
yeah,
of it.
yeah, correct. So that's that's what I talked to on that slide. Is for Ballard has a $300 million market cap, and we're
Yeah.
spending $50 million this year on exploration, whereas companies like Vault, Genesis, and Orabanda, who've got whatever they are, 7 billion, 3 billion. Yeah, we've got an exploration budget that rivals those guys, and obviously being producers, their resource base is depleting every single day. So yeah, that's how I think of it in terms of the context. What the juniors are doing, separate conversation about this sort of death spiral of raising money for this year's drilling program and just being in that perpetual come raise environment. And that, I guess, that was one of the things that we had the opportunity to do when we spun Ballard out. Is we said we're not going to do that. We're going to go and raise the money that we need, and that's what we've done. So I think you just
Yeah, and you guys have a healthy balance sheet now. That's one of the things that really drew me to the company as well, was the scale of the exploration that you guys were embarking on. And it's so easy for exploration stage, gold companies to be stuck in that perennial, like, just raise some money, do a few thousand meters of drilling, or 10 or 20,000 meters of drilling, and have a couple of good intersections, a few good intersections, then go back to planning again for the next 12 months of what are we going to do next year, try to lock in the drill rigs. Because so I was at RIU as well, and I did catch your presentation, and I had a conversation with a number of miners there. Obviously, it's all miners, so it's pretty hard to get away from them.
yeah
And one of the themes was that I was hearing again and again was definitely that it was that it was hard to get drill rigs at the moment in WA. So that was something I got from a few different companies that suggested that was a bit of a bottleneck right now.
Yeah. Okay.
So yeah, I
Um,
don't know. Apparently, you guys have 6 rigs. Maybe it's because of you that no one else can
oh,
get any.
I mean, we didn't. I don't think we did anything particularly clever there. We just, we just built up a scope and we went to tender.
Yeah,
And I guess that's one of the things of having such a large program. It attracted competitive rates. So I guess for the drilling companies, it works both ways for them as well. If they can lock down the next 12 or 18 months of drilling,
yeah,
then that works for them. And we've seen that with Frontline. So we've got 5 drill rigs with Frontline and 1 drill rig from Top Drill, and we've seen significant investment from Frontline. They just built us a brand new diamond rig. They've set themselves up with this fantastic exploration camp on site, equipped with their own activity room, and because they know they're going to be there for the next year,
yeah,
they make that investment in the kit and the site setup as well. So I think it's win-win. And I guess for Frontline, importantly, so we've got every single one of their drill rigs working for us. So I like that. Our business is material to the success of their business. So when we have an issue, we're dealing with the owner, not some. And apologies in advance to all the BD managers out there trying to put the railway tracks in front of the train for their various businesses. But for me personally, that's I don't want to deal with BD managers. I want to deal with the owner. And yeah, so we've got a really good relationship with those guys, and they're Frontline changed ownership a couple of years ago, and then the new owner, it's an opportunity for him to hitch his wagon to ours for the next couple of years, and hopefully his business gets to go on the back of that. So yeah.
yeah. Fantastic. And so just like we touched on like the catalysts, right? The catalysts that you have coming up. So you're looking at obviously resource expansion to 1.5 is your next target. You talked about 2 million ounces with the drilling campaign that you've got underway. That certainly seems like an achievable target. I believe you're targeting the first half of 2027, calendar year 2027, for your final investment decision.
Yeah, yeah, correct. So as you say, the 1.5 million ounces gives us that equates to an 8-year mine life. We think that's enough to take it through the fees, bankable fees, and go down the conventional project finance route of debt and equity. We've just appointed a debt advisor, Bedrock. Shout out to the guys at Bedrock, and they'll make sure, and part of that early engagement is to make sure that the house is in order for when we do kick off those proper debt discussions, independent technical experts and those sorts of things. So they'll work with us to make sure we've ticked all the boxes that we need to do. But yes, so to answer your question, that's probably the middle part of next year, and also the other piece there is in my mind a bankable feasibility is you've gone out to tender for all your major contracts, and you've got letter of a letter of preferred contractor within a condition precedent on FID. So we'll put out the resource Septemberish. We'll run that through our mine, update all our mine designs and schedules and so forth. Then once those physicals are firm enough, then we go out and we tender the mining scope, we tender the EPC for the processing plant, the power station, etc., etc. So there's quite a bit of work to do in that tendering piece as well. It's probably a good solid 3 months work there, and that's why, in a roundabout way, if you're asking why does it take so long to get from the 1.5 million ounces in September to FID middle of next year, there's the initial technical work, and then there's the tendering part, and then of course there's running the debt piece as well. So we might get it done a little bit quicker, but obviously when you put things out into the public domain, you want to be reasonably confident or certain that you can achieve it.
Absolutely. And so you've obviously just talked about debt funding, which I'm sure many shareholders would be happy to hear that. Um, do you have a sense for the cost of getting to mining? What it's
Yeah,
going to cost you?
we think it's around 250 million. Is the
Okay.
total capex bill, and that's assuming our top-down goal of 100,000 ounces per annum for 8 to 10 years. So it's a 1.5 million tonne per annum processing plant. So the underground, as I said, Baldock, 80,000 ounces per annum. That's from 750,000 tonnes per annum mined, and then with the regional open pits, that's another 750,000 tonnes per annum at Cormulai, 1 to 1.5. That gives you your 110,000 ounces mined, your 100,000 ounces recovered. So that's a 1.5 million tonne per annum processing plant, just based on recent announcements. Brightstar put out their EPC for the Laverton plant they're building. So we think the processing plant's probably, I don't know, 120 to 140, and then you need starter embankments for your TSFs, bore fields, the camp. Of course, the camp's a big lick of money. The rule of thumb for a camp is $100,000 per person per room. That includes all the central facilities, the wet mess, the dry mess, the gyms, etc. So if we need a 200-person camp, then that's a $20 million bit of kit. And then, of course, the pre-production capital, the actual, the working capital that you need up until you're cash flow positive. So yeah,
And so, do you think is your plan at the moment to try to fully debt fund that, or do you think you would be looking to tap the market again for equity?
oh, it's too early. So I think, yeah, I think it's certain that at some stage, we tap the market, and the Lassonde curve is real. I don't think there's any doubting that, and that's because in my simplistic view, because as soon as you start putting studies out into the market, feasibilities, and start talking about FID, the market just says, okay, there's a big capital raise coming, and um, I guess the flip side of that is, you obviously every day that goes by from that point, you're getting closer to actually being exposed to the commodity price. But
Yeah,
yeah. I mean, all we can do is our day jobs. I try not to look at the share price. We've got the money that we need to do. If we keep doing our jobs well and keep having the success we plan on, then the share price will take care of itself. And yeah, hopefully we're in a good position when we come to actually pressing the button for FID.
yeah, absolutely. Yeah, it is obviously just the nature of the beast that explorers and developers need to raise money. So that's no one's going to
Yeah.
be shocked to hear that. I don't think.
Well, there is some. I mean, we all look at like Minerals 260 with that royalty deal. I mean, that's yeah, that's well, and well done to them, because I think that's just changed the way people think about royalties. I mean, that was very well played. I mean, they've gone out there and they've raised with that royalty deal. They've got all the money that they need, and then they've had that share price appreciation because they're no longer come raise.
Mm.
And so yeah, and I think that was very very clever. So yeah, we will look as part of the we'll go and kiss all the frogs and look at various instruments just as opposed to just the conventional debt and equity. Yeah, but
Would you consider some kind of like late stage joint venture or farm in for the mining or anything like that?
at this stage, no, and that's only because we haven't really thought about it, and
Okay.
we haven't had I guess, the inbound interest. But yeah, I guess it's one of those things as you get closer to producing, you potentially become more interesting to third parties. But I've got lots of cliches, and another one is hope is not a strategy. So we just continue down our with our blinkers on approach of we're targeting standalone scale, 100,000 ounces per annum for 10 years, and if anything else comes along in that interim, then we just look at that. Okay, it's got a better plan A, and we've got a very tightly held register, with Delta and Hancock, Mineral, etc. There's without trying too hard, you get up to sort of 60% of the register. So I mean, I'm an employee. I mean, I work for a salary and performance rights. Any our shareholders will ultimately make the decision. So as management, we can just
Absolutely.
assess it on its merits and put that to shareholders, and shareholders can ultimately vote.
Yeah. And like you said, that's more or less Delta. Obviously, that they don't have majority stake, but they do have quite a big chunk. You do have some big neighbours, as you mentioned previously, within about that 100 kilometre kind of radius of your project. That one's also, well, that is the same slide we were talking about before, which is slide
Yeah,
5 on your presentation. So yeah, there's a couple of big neighbours there that might be interested. Like who knows what could transpire, but you're right. They would probably approach Delta Lithium instead of giving Paul Brennan a call, I guess, and say, "Do you want to sell
yeah.
us this?"
Well, and I mean, there's lots of speculation about that. I mean, Delta's cash backed with their cash and their investment in Ballard. They've got a negative EV, I think. So yeah, that's an obvious risk, but yeah, it's interesting. Oh, yeah, it's interesting. I'm not particularly the size of those groups. Volt now, Regis, Genesis. I worked for Rail for 5 years at Saracen, so um, you know, either of us could pick up the phone, but I suspect they're just all busy executing what they've already got on. And
Yeah,
I mean, I've spent my entire career in operations, and when you're operating, what you try, first prize is just to have a big rock factory, um, and the more moving parts, okay, that can add mitigate risk through diversification, but it could also add execution risk. So when these guys talk about, okay, we're just going to bed down what's in front of us, I get that completely, because why bring in additional complexity into your business until you've got that thing humming at steady state. And so I certainly suspect for the next little while, they'll be purely inward inward focus. And as I said, we just continue to paddle our own canoe and continue to build towards standalone scale.
yeah, that makes a lot of sense. Normally, those deals probably happen with earlier stage explorers that have a less developed project, or where there's a really clear fit with like a processing facility that has excess capacity, or something like that.
Yeah,
Something that just is too compelling to ignore. Um, but back to the project. So um, you've got these satellite deposits. You've got Baldock, which is obviously your main deposit. Um, what is it like? How can this change with exploration? What do you think are the possibilities? Obviously, that's a very open ended question, but like, do you think any of these satellite deposits could end up being something much bigger, or like how big do you think Baldock has the potential to become? Can you give us just a bit of a like geologist, I guess, overview?
yeah,
What would the geologists say about this ground and the potential here?
yeah, yeah. It's a good question, and I guess not. I guess we take the view that there's probably really no point having beyond a 10-year mine life. I mean, what the first question is, what weighted average cost of capital do you want to use for 10 years and beyond? So we're currently not looking beyond the 10-year horizon. And as we're talking about all those satellite or regional prospects, we're deliberately targeting them as open pits. We're only drilling them down to 150 to 200 metres depth because that's all they need to be to fill out our 10-year mine life. And a couple of people have asked that same question. Well, why aren't you drilling these things deeper? On one hand, I'm standing up there talking about how, these orogenic shear-hosted gold deposits plumb to the centre of the earth. And then on the other, and then we're talking about, okay, we're going to drill these things to 250 metres, and that's, I guess, we're swallowing the elephant one bite at a time. Let's get ourselves a 10-year mine life, and then we're away, as opposed to just, we could be drilling. We're confident the resources extend at depth. They are orogenic shear-hosted gold deposits. We've got a couple of good analogues in our little part of Western Australia. We've got Agnew to the north of us, 10 million ounce camp, same greenstone belt, same geology, same big granite intrusion that we have, which we think is significant. And then Orobanda's flagship underground riverina is 80 k's to the south of us. Again, same greenstone belt, same geology, and I see that they're putting out releases. They're tagging mineralisation at 1,000 metres depth. So in the first instance, we're targeting a 10-year plan, and obviously, once you're in production, you can keep drilling. There's no. I'm not sure if I'm answering your question that well. We just don't see the point trying to grow the inventory beyond 10 years at this point. So
what I'm hearing is there's lots of potential, and you're trying to stay very focused on a very specific plan, essentially.
And Todd Hibbard, he's our geology manager, and he answers this very well. He worked at Jundee for 10 years, and Jundee, call me a liar, might be another, I should know, 10 or 15 million ounce camp. He said it wasn't 15 million ounces on day one. It's over a period of time. So we're targeting 1.5 million ounces and then 2 million ounces, and who knows what it could be in time. I was talking to you hear stories all the time. I was talking to an old colleague from, I mentioned I'd worked for Ralph Finlayson at Saracen, and when I was there, we started a new underground mine called Whirling Dervish, and I saw a guy a few months ago, and he was telling me that mine's been operating, must be for 5 or 6 years, maybe 7, and they just had their best ever intercept at that mine, 750 metres deep. So they're big systems, right? But of course, it costs a lot of money to drill a 750 metre hole from surface, and that's why the typical WA gold mine has a 5-year mine life in perpetuity, and that's because it costs so much money to be able to drill that far out in front of you. Some of these holes we're drilling at Baldock, these 700, they're $100,000 holes. So you just don't blaze away with drilling at depth.
If you had to turn off the exploration and come up with a mining plan and start mining, could you make that work? Could you put something together? Obviously, no promises, not holding you to anything, but could you put something together with what you already have that you think would be a feasible mine plan to make money?
Yeah, we could, and there's no question. So that the Baldock ore reserve piece, as I said, that's 400,000 to 500,000 ounces. That's a 6-year mine life producing 80,000 ounces per annum. So we know we've got a 6-year mine life now. The reason that we're not moving forward with that is because we want something that's got market relevance and scale. We are growing the mine life and the production, deliberately goal seeking a minimum of 100,000 ounces per annum for that market relevance and scale. But right today we've got a very profitable 6-year mine life, and that's part of the reason as I said, we a few people knocked our strategy when we came out of the IPO and said, okay, the first thing we're going to do is an 86,000 metre infill drilling program.
Mm.
People were like, what the heck? Well, why aren't you're an explorer? You should be exploring. We said, yeah, sure, but we want if we're coming out with a 500,000 ounce reserve, a reserve ounce is worth a lot more than a inferred ounce. So yeah, we do have a solid 5 or 6 year plan today.
Yeah. And I think uh, that's worth highlighting, I think, for investors, because the average investor isn't a mining specialist and they're not a gold mining specialist, and they hear the numbers, and we can talk about all the numbers and all that kind of stuff, but they don't necessarily know what it means. And there's a bit of a magical number. I don't know. My take anyway is that there's a bit of a magical number around 1 million ounces, where you get a bit of an inflection point where projects start to become much more appealing and feasible. And you guys are sitting on, like you said, 1 million ounces in one deposit, and not just 1 million ounces. It's quite a nice grade too. Like we haven't really touched on grades yet, but um, there's plenty of gold companies that are putting forward, mine plans on like 0.6 grams per ton, and yes, they will be, open pit. They will be cheap to process, all that kind of stuff. But when you're sitting above 2 or 3 grams per ton, it's a very appealing deposit.
Mm.
For Baldock, how deep do you think you're going to have to go to um, start production? Like how deep before you get to a mineable quantity?
Oh well, that 5 years mine, 5 to 6 years mine life we've got right now at Baldock is all within the top 350 metres. So that 86,000 metre infill drilling program, we only drilled to 350 metres depth, and the drilling we're doing now is that distanced again. We're doing 350 metres down to a little bit more down to 750 metres depth. But all that's doing is adding mine life to Baldock. So there's 6 years mine life in the top 350 metres. If we can get another, well, ideally 4 years from the drilling we're doing this year, that's the goal. That's the 10 years, and 750 metres depth is still reasonably shallow for an underground mine. I think once you start getting down beyond, well, it depends on the ground, of course, but
Mm.
once you're sort of 1,000 meters depth, and the cost starts increasing because of the distance you've got to haul the dirt, and you can get into some seismically active ground, and ground support increases, and your development rates slow down, et cetera, et cetera. So we see 10 years worth of production at less than 750 meters vertical. My technical background is underground. So we're reasonably confident that'll come together.
Perfect. And it must get claustrophobic down there. What's the deepest you've been underground, just out of curiosity?
The deepest one I've ever worked in was at Hill 50, which is near out of Mount Magnet, and that was we were about 1.2 or 1.3. So that to jump in your ute and drive to the bottom of that mine would take about an hour. Yeah.
Does that ever mess with your head? Or it certainly would mess with my head to know that there's like a kilometer of, rock essentially above me.
Yeah, it's an interesting one. I don't know, I think because you're always in a reasonably well lit environment. The actual main decline itself is a 5 by 5.5, or the space is you're in a reasonable sized space. It's not like I get claustrophobic sitting in a plane, because you're in this little compressed tin. Whereas, when
Thanks
you
for
got
that. That's going to be playing on my mind for a while now.
yes, I don't know the mine. No, the short answer is no.
Okay.
yeah. And for what it's worth, I've never actually seen anyone sort of freak out, if you like, or have some sort of anxiety attack when they've gone underground. So I think you'd find that you'd actually be perfectly fine.
Yeah,
Um, yeah, you jump in the car and you're chatting with people, and um, yeah, it's fine. Yeah.
yeah, very good. Okay, and just like I'm kind of curious. So obviously we've got you've got this project that that's happening at the moment. You've got a very clear plan that you've laid out for us. What do you see in the future for Ballard, like longer term? Like, do you want to be getting to the point where you're buying other mines, or do you think like after this project is up and running and making cash, will you just do you think you'll be going out and exploring the ground that you already have? Like, do you have any thoughts about what happens next?
No, maybe I should.
Okay,
Yeah,
good
uh,
answer.
yeah. We no is a short answer, and I think the old there's not old saying that it's the best spot to find a new mine is at an existing mine. Um, so yeah, I think we need to give that potential camp scale project justice in the first instance. I guess from a de-risking perspective, having all your cash flow coming out of one portal, you de-risk via mitigation, and that's why I guess single asset companies trade at a discount. Our thinking around that is we mitigate that by having the Baldock underground and a number of satellite open pits in production. So that's our little risk mitigation process. Um, I don't know. It's interesting. I mean, there's growth for growth's sake, of course, and I wonder whether shareholders, it's reinvesting to buy another project and get into the ASX 100, so you become more investable to big funds and so forth, as opposed to just generating good cash flows 10 to 15 years. Maybe there's a sniff of a dividend in there. Um, Yeah, I
Yeah,
honestly don't know. I guess you just, as I said, it's probably some of these things aren't within your own control, and if something came up and it's makes sense and it's logical and there's genuine synergies, um, then yeah. But we're not sort of actively looking right now, and that would
yeah,
it would feel almost irresponsible to. I mean, we've shareholders have invested in Ballard because they want to see us realise the opportunity of what Mount Ida could be. So if we were to go off and get distracted with the shiny new toy, um, yeah, I don't know if that's what our shareholders want. Well, not yeah. That I'm sorry, I'm probably talking more about today than down the
mm.
track. But
So no plans to buy any lithium mines then, I guess.
no, no, no.
But I think that's a that's a very reasonable answer. It's a reasonable answer to say um, just maximize the this asset that we've got, and there'll be plenty of shareholders that will be happy to hear and pay a dividend. In 4 or 5 years or something like that, start paying a dividend, reward our shareholders. Obviously, as we've already discussed, you have some very big shareholders there that will have um, a strong impact on the decisions that are made. I would assume, they'll be probably making their feelings known about what you should do with the cash that's generated, which is reasonable if they're
Yeah,
owning a third of the company to have that kind of voice. So yeah,
yeah, exactly. And I think mines are notorious for that, right? We just constantly keep reinvesting it as opposed to giving it some of it back to the shareholders. Um,
yeah, particularly gold miners, I think can be certainly like that. Um, it's, I mean, the projects are tricky, like you've touched on. Gold mines normally need to keep exploring and keep putting something back in, and kind of there must be. some kind of sense of like anxiety about, we have to have like at least, that 5 years of mine life, and it takes, time to explore. So there's a constant kind of thing going on there of needing to be, constantly growing that resource or finding new projects that extend the mine, the company's lifespan. It Probably a lot of management teams and investors as well would be disappointed if the plan was simply to wind up a company.
Yeah,
That actually does tend to get, like, that's a notable thing when that is the plan, because there's obviously a lot of self-interest that's often involved, from management teams and that kind of stuff. But yeah, I mean, like we've touched, it is very exciting, this piece of ground, because you do have all of that potential to keep exploring and growing, and that is, you don't really need to be looking any further than where you are. So I think that's definitely a very reasonable kind of strategy for the time being. But yeah, I was just curious whether you had any any grand plans that taking over the world or anything like that.
yeah,
But
not at this point. I think, yeah, as you said, gold miners, we typically only look at a 5 year horizon because there's, so I think the next, I could see the next 5 years in the blink of an eye, sort of thing. By the time we get through FID, and then it's 18 months to build it, and then you're bedding down production, and your whole life gets consumed with short interval control for a period up until you get it to steady state. So all sounds easy when you say it pretty quick, but a bit of work to be done. And yeah, I think, yeah, Todd Hibbard, our geology manager who I mentioned before, he's just super excited about this particular ore body. Stuart Matthews, who's one of our non-exec directors, you probably heard me say this last week in Sydney. Until he retired a couple of years ago, he was executive vice president of Goldfields Australasia. So used to looking at big camp scale projects, big exploration budgets. And Stuart, the first time we took Stuart out to site, he just couldn't believe the potential. He said, "How is it that something like this is still sitting here?" And the simple answer to that is, and I don't pretend that we're Robinson Crusoe. It's just a piece of land that's never been owned by a major. And that was Stuart's comment. If Mount Ida sat within the Goldfields portfolio, they would have pinned their ears back and had a crack years ago. But coming back to what we started with, the death, not the death spiral, which is that junior mentality where we raise enough money for this year's worth of drilling, and then we hope that the share price goes up, so then we're raising for next year's worth of drilling. We're not being too dilutive, and which is, yeah, it's just a really shit way of doing things, I think. So just, yeah, as we've done, just rip the band-aid off, and we all know how it takes time and money to get a project to the starting line, and we haven't even talked about the environmental permitting.
that's what I
So
was
let's,
going to ask
yeah,
next. Yeah.
let's not pretend the amount of work and the effort that's required. And when you're sitting there with your $2 million cash reserve and talking about you're well funded, I just cringe. Yeah, we got a 3,000 metre drilling program coming up. I mean, like, whoop de
Mm.
doo. Yeah,
Yeah, you can, as a mining investor, you can take on as much risk and uncertainty as you want to. You can you can take on projects that are just a tenement with maybe some soil samples or something like that. If you want to, you
yeah,
can find those.
exactly right. It's a risk reward proposition, and I think, yeah, I mean, there's people out there, there's big institutional funds who are willing to take that risk. Um, I had a meeting last week with someone a fund that will remain nameless. $150 billion under management, and they're having a meeting with us. And I said, "Why are you coming? Why are you coming this far down the curve?" He said, "Because we have to. Because we're always looking for investments. There's so much capital to deploy. They're always looking for for a home, and they're willing to take that risk."
Yeah, yeah. Well, yeah, diversification helps with risk, I guess. So, but I mean, yeah, Ballard is not. Yeah, well, it's certainly in the less risky category for projects in that development phase and exploration phase. So,
Yeah,
yeah. Um, okay, I'm like so. The last thing that I did want to just touch on, well, there was two last things, questions from me. So one was just, do you have a sense for where your all-in sustaining cost will land? And then the other one was, you mentioned environmental permits. So obviously with mining projects, all of the permitting and native title and all that kind of stuff is always a consideration. Are you able to take investors through those 2 points, the
yeah,
all-in sustaining costs and the permitting situation?
sure. All in sustaining costs we expect to be about $3,000 an ounce. Diesel's obviously a huge driver both for your electricity generation and your mining fleet. So that's probably my only caveat there. And Yeah, we take a similar view on the gold price. Like people saying, "Well, why aren't you rushing into production, doing a toll treating arrangement, and these sorts of things?" I think even if the gold price comes off a little bit, say the gold price is say it comes back to $5,000 an ounce, and we're still producing, you still got a really good margin there.
Yeah.
So yeah, we think the costs will be where they probably where everyone expects them to be, and there's lots of analogues out there, companies of our aspirational size. You can read their quarterlies, and yeah, I think 3,000 ounces is a good number, and yeah, and the permitting, and that's a real credit to the Delta personnel who had the project prior to the demerger. Is They did a lot of work, and Ballard was really the beneficiary of that, and I think that's with the grade. That's probably the other thing that sets us apart from the rest of the developer pack is our advanced permitting status. When I say advanced permitting status, we're fully permitted, full stop.
Yep.
We've got everything we need, and we're in a very fortunate position again just with the cash balance. We're able to, like, we've got 3.7 gigs of water licensed. The rule of thumb is a cubic metre of water for a tonne of rock. So in theory, that supports a 3.7 million tonne per annum processing plant. We don't envisage we need anything like that, but it's nice to have. And later in fact, on Friday, the water bore drillers are heading out to site, and we've got 3 production bores already installed, and we're going to install another 4, and we'll actually have the production bores in place for that abstraction. So we're yeah, just trying to de-risk those sorts of things, and I put water up there in my top 5 of key risks for execution. Some of the scars I wear from previous roles, you learn from these things, and water's certainly one of them.
This is in general, you mean, for mining projects, or
Yeah,
not specifically to Ballard,
no,
given
just
that you have
mining
the
projects in general.
yeah.
I think well, this is just my personal view. Resource risk is always number one. Second is probably permitting risk. Obviously, if you can't get permitting done, you haven't got a project. And then down is probably met. If it's a refractory ore body and you can't produce a con or do something with it, then if you can't sell it, you haven't got a product. And then I'm going to say water after that. Geotech risk can generally be managed. It's just if you have to put in more ground support, it just costs you a bit more, but I don't think it's a fatal flaw.
Yeah, it's probably one that's overlooked by most investors. I'd say it's. I haven't had a lot of discussions about water. Like I know it's a thing, but it's not something that is usually discussed.
Mm,
At least on the investment side. I'm sure on the mining side, you guys talk about it.
yeah, well, yeah. Yeah, I get, yeah. So we're like we're in good shape.
the permitting, I just wanted to highlight that the permitting situation is quite good. I'd add to your list of like key risks. I'd put at zero probably funding risk, like before one, personally.
Yeah,
Just having seen so many, mining projects fall over on the money front, not necessarily the technical or mining front or anything like that. It's a very very strong risk as well, which you guys are obviously past that hurdle fairly
I
well.
think so. Well, and
Mm,
we're comfortable that an 8 year mine life certainly ticks that box off. And if it's a $250 million capex, the payback is, in theory, it's less than 2 years.
yeah,
Um, so yeah, we're easily relaxed about that.
yeah. You look relaxed. It's good.
Well, it's yeah, yeah. I think we are. And that's because
Mm,
we're executing our plan. We've set ourselves a plan.
yeah,
Everyone's on board. We've incentivized every single Ballard employee with those milestones that I spoke about, the 1.5 million ounces and the 2 million ounces. So we're all rowing in the same direction, and I guess people just enjoy working for a growth story.
yeah.
Yeah.
Exciting times. Well, yeah, I really look forward to following the story. Um, we're covering it obviously on the Markets IQ, so we're covering you guys. Yeah, and nothing else really from me. Is there anything else you wanted to add, or
No, no, thanks so much for the chat.